All right, hey everyone. Mark here, Mark P Markets. Thank you for joining me for another US market open, and we're going to take a look at the major markets and see if we can find a day trade setup on Bitcoin again, like we've been doing each day. All right, I'm running a little bit behind. I apologize for that very much. Technical things hold me up here, but let's get this thing started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, cool. Now, hey, everyone, I'm glad to see everyone. Thank you for your patience. All right, so real quick, I just want to mention I am sponsored by 8Cap Partners. They are an Australian-based Forex and CFD broker, and they offer numerous instruments that you can trade. If you'd like to get my training program for free and you are a non-US resident and you open an account with 8Cap and deposit $500 and trade one standard lot, you can get my training for free. Again, it has to be non-US and you can't be from a sanctioned country. If you're interested in that, let me know. Click on the link in the descriptive portion of this analysis. Also, check out my training program, okay, at markpmarkets.com. All the concepts in that program is what I use to provide the analysis here on these streams and to come up with those day trade setups that we're looking at. Now, the training program does not cover day trades, but it's the concepts that are just used on smaller time frames. Yes, it's more advanced, but you want to know how that stuff works? That's all there, okay? Less is more, by the way. Okay, and one more thing. If you're not in my Discord community, join it. The link is in the descriptive portion as well. Check it out. It's still free. All the premium chat rooms, all the chats and all that stuff with all the information is unlocked. So you can see everything. All right. The signals, the information about our long-term investment ideas, all that other stuff. Check it out. I am going to close these rooms off very soon. Okay. And when I close them off to the free members, there will be a 7-day free trial. Once I have all that together, I will be talking about it. Okay. So with that being said, let's get into this right now. All right. So real quick, let me just say hello. I got Eligius. All right. Steen, good to see you. Armand, hey, how are you? Bill, good to see you. Chris from Milan. Buonasera. Alice. Oh, Alice has a question here. How come I don't use that other app? I'll tell you why I don't use Zoho. Bill, you're correct about Zoho. The reason is no one came to those streams. That's the reason. I put the streams out and no one would either read the thing or click on the link. So the whole idea of those streams was to have people come and watch them, right? So I figured, let me put this thing on YouTube because at least I'll get more than just Bill watching me and Alice, who would show up once in a while. Okay, so that's why I don't use it anymore. It wasn't, I mean, I liked it, but it was not, it just was not feasible, okay, or practical for me to continue to use in order to make my time worthwhile. All right, anyway, that was the answer to that. By the way, people, if you want to share what country or what city you're from, that's a cool thing it's a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. All right, so first things first, Bitcoin. As you know, today is the FOMC meeting, okay? I believe, I could be wrong, but I believe that is this it for the year? Is this like their meeting for the year? Because maybe there's one in December. I don't know. Again, I don't pay a whole lot of attention until the week of the event. This is an important event because if the Federal Reserve hints at the future of their agenda, meaning they're going to be, dovish, they're going to let off on interest rates, or they're not going to raise any more, or they're going to continue to raise, the market wants to know their intent. Okay, and usually they hide clues. They're very subtle about things, and the market is very, very sensitive. Okay, now often going into these meetings, you get this type of price action that you see right here, nothing. Okay, now I bring up that meeting because here's the thing. People ask me, so what do you think the Federal Reserve is going to do? Do you think I know? Do you think I'm friends with Chairman Powell? And he's like, let me tell you what I'm going to do. Just don't tell anyone. I have no idea. I don't try to guess the Fed. I don't think I'm smarter than the Fed or the market. They're going to do whatever they're going to do. We have to interpret this as a binary event. Okay, it can go one way or the other. Or actually, there's one more possibility. It can go nowhere. I mean, that's it. All right. People want to know the future. There's no way to know. Markets are random. When that information comes to the market will adjust. Now, here's the mistake not to make. Don't sit there with your nonsense opinion or your conventional wisdom and think you understand how to interpret the news when it comes out. That's the first mistake all these novices do. Well, I think this. Well, I think that. The market doesn't care what you think. The market is going to interpret the news the way it wants to. And what this means is you may have, you may have a hawkish outcome, right? Federal Reserve may say, we're going to continue to raise rates, but they may say something in that where they say, we're going to raise, but we're not going to raise as much as we originally thought we were going to. That's actually good news for the market, even though you're conventional, but he raised rates. I don't understand. I don't understand. The market's rallying and I'm short. Okay. The news may come out bad, but not as bad as the market thought. Okay. Or the news can come out good, but not as good as the market thought or expected. And that's where you see that irrational movement or that movement that does not make sense. So don't try to make sense. Let the market do the work and then you adjust. I am a follower. I follow the market. I follow the price. Price knows everything. I know nothing. Okay, so I may have some ideas here and there. We're trying to gauge probabilities and all that. If the market goes another way, we adjust. We are followers. We don't assert our own ideas. Okay, now, so with all that being said, Bitcoin right here, all we can say at this time, okay, before the Fed news at 2 o'clock, the announcement comes out at 2 o'clock and the press conference begins at 2:30, okay? Usually the hints and all that other stuff usually occur at the press conference. So the market can be very wild. It can start out really high and then sell off or the other way around, okay? So it's best to let the market figure itself out. What I'm going to say here is all we can tell right now, and I have a short signal that I've called. There's actually a couple of short signals, but I put an official signal in the chat a few days ago, and that signal is still in play and it's still red. All we can tell is that this resistance area is still intact and it's being respected at the moment. That's all we know, okay? So if the resistance sticks, it's a lower high relative to these other resistance levels. I pointed that out numerous times, okay? And if we get momentum follow through, you're looking at a test of 18K. Maybe not today, maybe over the next few days. It's going to depend on the tone that is set from the Federal Reserve today. Also, we have NFP on Friday, which can cause a lot of range expansions in this thing as well. Okay, so we have a lot of potential random movements that we do not know. All we can tell from the chart is that a lower low is anticipated. It's reasonable to anticipate. That's all. Doesn't mean that we will get the lower low. Okay, so the short side, if you're short, it's still worth it to give it a chance, but you're taking a risk going through the Fed. I mean, and that's a chance you have to take. If you're not comfortable with that idea, then get out now, okay, and take a small loss if you're short from 250. Now, let me just point out a scenario, and then I'm going to look at a couple other markets real quick. Then I want to look at Bitcoin on the small time frame. So here's the thing: if that news comes out dollar bearish, okay, which would be dovish, dollar bearish, dollar sells off. You're likely to see a spike like that, okay? But don't jump to conclusions on that spike. The key is, how does it close? Same on the other side, okay? It may spike on the bearish side, but what you're looking for in those situations is not to jump to conclusions. Number two, does it spike and then reverse and give you a pin bar? Okay, that's also going to be a very telling sign, one way or the other. So that's what to look for. Don't get caught in that. Don't get caught on the wrong side. Let it play out, okay? But the resistance is still intact. If that resistance is cleared, you're eventually looking at like this level up in here, okay? Which again, that can take like a week to play out. We're not looking at, a couple of hours. We're looking like at a possible week, but that's what we're looking at up there. And of course, this needs to be cleared. Okay, that's what, the 20,500, that needs to be cleared and sustained, meaning it closes above, next candle closes above that kind of thing. If we test up 20,500 and we just get a pin bar, all it means is the resistance is still intact. Okay, so I don't want to spend hours and hours on Bitcoin here. I could talk about it for a long time, but you should have an idea of what to expect now, what's within reason. Okay, the best thing you can do is avoid what other people say. Focus on the price. let's take a look at the bond market real quick. Okay, so bonds, the bond futures. Again, people like to make this more complex than it has to be. This lower high right here is still intact. All right, lower high, price is trying to sell off a bit, but again, it's waiting for the Fed. Every market is waiting for the Fed. Look at the bearish pin bar that we got yesterday. Realize something, that bearish pin bar that appeared yesterday, that was a full green candle at one point. Okay, that was a candle that was green, and it looked like that. So if you jump to conclusions, or you are unable to control yourself, you're going to say, "Whoa, look, there's a higher low. Bond market's strong. The stock market is going to be saved. It's time to buy all my favorite stocks." Wrong, because look how it closed. Bearish pin bar. It faked everyone out. Don't jump to conclusions. Look at levels. Resistance intact. Nothing to do. This thing is still bearish. Okay, nothing to do. There's no reason to be buying bonds just yet. All right. So if that's the case, and this thing's testing its low as a result of today's meeting or as a result of NFP, then rates are still rising. If rates are still rising, nothing is going to rally. Nothing is going to have a sustainable rally. Nothing. That means Bitcoin. That means your garbage altcoins. That means all your favorite stocks. They're not going to rally for long. The bonds need to change. They don't change. They can spend weeks and weeks and weeks in this configuration without changing. Okay, so it doesn't mean that the stock market's just going to keep selling off and going to zero, but it's not likely to go anywhere significant. So there are strategies for that type of environment. Okay, whether you're on the day trade time frame or swing trade time frame, there are things to do, but you need to understand the environment. All right, so you know what's realistic and what's not. If you believe all the morons out there that are calling this and calling that, you're just going to have random results. You can get the same result by flipping a coin. Okay, so don't waste your time. So that's the bond market. Let's take a quick look at the S&P, SPX USD. Okay, so again, these markets are waiting. And I mean, yesterday, if you looked at the market in the afternoon yesterday, I mean, it was horrendous. It was just like barely moving. Every time I check these things, they're like around the same price. They're not moving. Okay, again, they're waiting for the Fed. We're still at a resistance level here. So in order for the S&P to do something significant, we're going to have to see the outcome of that meeting. This also tells you one thing. This nonsense move from Friday, right? All that nonsense closing on its high was nothing but nonsense, nothing but hot air. That is why you can't jump to conclusions on things like that, because look, I mean, it's just giving it back. So that movement meant nothing. All right, if that movement was meaningful, you should see a higher high. You should see something working its way like that. Okay, there's no bullish momentum here, but from what we can see from the bond market, this is more likely. This scenario that we see right now is more likely. How does that information help you? Well, for one, you shouldn't get sucked in to buying these ridiculous stocks, when they're breaking out and this and that, and thinking that you have the bottom of the market. If you're a day trader, that's another story. Or, we have like that call on butterfly and stuff like that. People may find that confusing and say, well, but I'm long butterfly. That's a long-term play. And something like that, and I keep telling JP, something like that is something that may take a couple of years to play out. You're not going to see that do anything spectacular until the bond market turns. It's a highly speculative stock. It doesn't mean it's just going to go to zero. It's probably going to fluctuate maybe between $5, maybe $10, but that's not spectacular. Spectacular is the thing runs to $30, okay? That is possible in a multi-year scenario. Of course, we're going to have to see a change in these economic forces for a stock like that to have that type of movement. Okay, so again, it's about having perspective. All right, and I'm throwing that in there because I know a bunch of people are along that thing, and I think it's a good idea. I'm just saying, understand the limitations at the moment. Okay, so that's the S&P. So we'll see how this S&P behaves. If this low is taken out today, which is possible, then all this is another lower high. Okay, and you'll say, but how is that a lower high when you have all these higher highs over here? This movement does not take away this. That movement does not equate this movement. Okay, this movement, the smaller movement, this rectangle here, this purple rectangle is smaller than this one. Okay, see that? So magnitude wise, This little structure is only good for small time frames, day traders, that kind of thing. Bigger picture, it doesn't really mean anything. That's what you have to keep in mind. Don't get obsessed with small sections of the chart. You have to see this stuff in the eyes of context. All right, so that's the S&P. Let's take a quick look at the dollar, and then I'm going to jump to the euro, and then we're going to go to Bitcoin on the smaller time frame. So again, the dollar, like everything else, is waiting for the Fed. The dollar had this nice little move, and now the dollar is stuck, okay, in this little section over here. But that doesn't, it's just nothing going on here. The key level for the dollar is this support right here. Is this a lower high developing? It could be, but we will not know until today's close, okay? If the Fed comes out dovish, this thing is going to just go straight. It's just, you're going to see a green candle, okay? If that Fed comes out dovish, you're going to see a candle that looks like this. And if that's the case, then most likely this thing is working toward its high. That's what probability favors, and that's based on the structure. Higher lows and higher highs all over the place. This thing is nothing more than a consolidation, okay, a broad higher low consolidation, typical of like a wave 4 if you want to count waves. And this thing is likely to produce that, one more leg higher or whatever if this support stays intact. And that can be helped along by the Federal Reserve, or also a very hot NFP can do that as well. So keep that in mind. There's nothing to judge here except trend is still bullish. That's all we can say about the dollar realistically. If that's the case, then what can we say about the euro? Look at the euro. So this stupid coin, this pair, right? I'm short. You guys know where I'm short from. At one point, this thing was up almost 100 pips. Okay, now this thing is about what, 70 pips maybe in my favor, something like that. And I said I'm willing to hold through the meeting. It's a risky thing to do. I mean, this thing is very reluctant. It's very hesitant. Again, it's waiting for the meeting, as we saw with the dollar. If that dollar sells off, this euro is going to be right back up to here. Okay, and most likely I get stopped out. Or I'm going to have to take a smaller loss. Right now, this trade is in profit. So you say, well, you always talk about greed. Shouldn't you get out? Well, I mean, if I get out right now, I'll have a profit. But the thing is, it doesn't justify my risk. And I'm willing to give it a chance through the Fed. I'm willing to give it a chance because, I suspect that the Fed is going to be hawkish. We have to see. All right. I could be wrong, but I'm willing to take the chance. I'm willing to risk. That's the key thing. If I was not willing to risk, or I don't want to give money back, then you get out now. If you're short the euro and you don't want to take that chance, you get out now. Okay, get out now. Take the profit. This thing is worth, 50, 60 points, 50 or 60 pips in the green. Take it now. I'm telling you, take it now. If you don't want to take the risk, I am open to the risk, and that's it. Okay, I'm not even going to move my stop to break even. I want to give it some room to fool around. The general trend on the euro is bearish. The general trend on the dollar is bullish. I'm willing to give it a chance, but I could be wrong. The key factor, again, I'm willing to take the risk. So you have to, only you can answer that question yourself. Okay, let's move along here, and let's take a look now at Bitcoin, and we're going to go to the perp chart. Okay, so here, BTC, USD, and let's go to the futures. Let's see if we could pick another one today. We could pick BitGet. All right. These are all these exchanges, right? Like here's BitGet. They're all the same. It's all the same chart. It doesn't matter who you use. I mean, if you have an account with BitGet, you use the BitGet chart. If you have a BitMEX chart, you use BitMEX. I mean, it's all the same. If you want to use the standard, Coinbase chart or whatever, you can use that one. It's basically the same. So now this is the daily chart. Let's work our way to the 30-minute chart. Okay. Hold on. Let me catch up on these comments too. I haven't been looking at these comments. All right. Mark was using it. Okay. Okay, Bjork, good to see you. All right, cool. Oh, Copshello. I don't know where that is. Oh, Kosovo. Okay, there you go. Thanks. I know where that is. All right, Sean, good to see you. All right, Alex, I got my Romanians here. Well, my one, I used to be very famous in Romania. I'm not famous there anymore. I only have one Romanian here. I used to have 4 of them in here. The other guys, they don't like me anymore. Okay, I'm no longer famous. I think I'm more famous in Siberia now than I am in Romania. Anyway, but I still have Alex here. So my guess is that the market will keep sinking unless we are anything. Well, I mean, we have to see, right? So I suspect if Powell's hawkish, obviously that's going to boost the dollar. If the dollar is boosted and those bonds continue higher, then bearish activity or selling is a more likely outcome, at least for the short term. Like I always tell people, don't become opinionated. You have to have a very open mind. Things change. I'm looking for the bottom of the market. Okay. I look every day. I'm looking. There's no bottom in place yet. But when I see it, believe me, I'll start talking about it. And I'm going to start. I want to put a portfolio together of highly speculative altcoins, cheap stocks, all these things that are going to have that potential. But that idea it's not going to be like a magical thing that, in a month, it's going to be up 10,000%. It's none of that kind of nonsense. It's a multi-year thing. Okay. And I think that's a great strategy because we're certainly not at the top of a market right now. If anything, we're closer to the bottom. Okay. But the bottom may be still a little further away and there's no evidence of it yet, but I'm just letting you know, I'm always looking for it. I'm looking for the signs. I'm always evaluating and looking for those signs. Okay. And when I see them, also when they start to appear, it's not like, okay, look, there's one sign and then you put all your money in. It's not like that. You start accumulating carefully because there's still risk. There's still going to be movement all over the place. This prices may test a lower low one more time. Okay. You just have to recognize how the environment's changing though, and how the probability of it going lower becomes less and less and less. We're not there yet. Okay. So anyway, so Bitcoin, let's talk about Bitcoin here on the 30-minute chart. Why 30-minute? Well, first I want to get a sense. How we doing? Well, let me just check my time. Okay. So we want to get a sense of levels, right? When you're looking at these things from the day trade time frame, all this stuff that I talk about with the economic environment and all that, most of that heavyweight stuff you don't even think about, okay, as a day trader. In fact, it's possible. I mean, yesterday and the other day, I had longs on the day trade time frame here. We had long signals, but on the bigger picture, short, or I'm calling for shorts. That some people may find that confusing, but you have to stick to your time frame. Okay, on the swing trade time frame, Bitcoin is not a long. All right, but on the day trade time frame, it's constantly going to change. 1 minute it's a long, then it's a short, then it's a long, then it's a short. That's how it is when you're working with a 5-minute chart. We're only looking for momentum. There's no room for opinions when you're looking for momentum. No room for opinions or ego or all that other nonsense. Leave it at the door. Okay, this is about momentum, and momentum changes constantly. 1 minute it's strong, next minute it's weak. Okay, so you need to be able to be on top of that. Like again, I always compare, this is like the NFL. All right, you have to be very quick in your thoughts and decision making. All right, so here's the thing. We want to see levels, right? We want to get a sense of levels first. So we have a support right here, intraday support at what, 2340. Okay, 20,340, that area. So that means 20,340 to 20,400, like that zone. We can give it like a zone. So, and look at the tests. Look at these just over the recent few hours. Look, test over here, rally, test, bounce, test, bounce. We have these pin bars all over the place. Okay, fine. So there's some support there. Now keep in mind, we have the Fed coming out. The S&P is not moving. You think Bitcoin is going to move? Do you think Bitcoin trades on its own? It does not. It reacts to S&P. All right. If you don't know that by now, you should know that. So here's the thing. If that's the case, we shouldn't expect much out of this over the next few hours. But anyway, we do have a level. There's some movements. A reasonable expectation in terms of profit targets may be 50 to 100 points at this point. Okay, I'm shrinking it a little bit because you can't really expect much until the meeting comes out. When the meeting comes out, you'll see this thing expand. Okay, now, so these are our levels on the 30-minute. You have 20,350 to 400, and then you have resistance here at what, 20,453. I mean, that's pretty tight. Okay, I mean, this thing's like in 150 or 200 point range here. That's pretty tight. All right, and then if it can break through this resistance, you're looking at this area up in here as your next resistance. How is this useful? Well, this is an area to consider sell setups or an area to take profits if it gets there. All right, this can take all day to get there, especially at this rate, especially if it's not going to move for the next few hours. All right, so that's the 30-minute. What's going on in the 5-minute? Let's take a look. So this is where you're looking for the setups, okay, and confirmation. Look at this nice, is that a pin bar? Let me see. This is not exactly on. This is not a pin bar. That's an inside bar. This candle over here, all right? That came off of the support. And I mean, look, since then, look what's going on. You have another inside bar here, another inside bar. I mean, all you have are inside bars on this 5-minute chart. It's working its way higher. So here's an interesting situation. Do you take this, like you have an inside bar right here too. Do you take that as a long if it breaks out? Not a good idea. Why? It's an inside bar. It's confirming. Why not? Look where you are. This is a very minor resistance, but look at this. Look at this. Look at all this activity in here. Look at all that. I'm not buying it there. I don't care if there's a buy signal there. I'm not buying it there. Okay, on top of that, you're right in like the midpoint of this structure right here. Again, I'm pulling out context. See, people, the first thing that they do is they focus in on, they obsess over this. They just focus in on, oh, look, buy signal. I'm going to buy it. I'm going to buy it, and it's going to go all the way up here because I want it to go there. That's the novice reaction, okay? But I look at all this other structure, all this overlap, and all this other nonsense, and I'm like, I'm not buying it there. You know, how many people are going to jump in and sell this thing like right here? I'm not taking that chance. I'm not willing to take the chance. I could be wrong. Maybe this thing goes a little further, but I'm not willing to take the chance. Okay. So in a situation like this, what to do? Well, you can consider, I mean, what about the short side of that? Is this worth looking at for a potential short? Well, let's see if a short was taken over here, right? Possibly. What could have what was the potential, right? What was the payoff there? So the low here is 20,000. So 396. We'll round that to 400. The low of the candle was 353. Is that right? So 50 points. That kind of sucks. Okay. I mean, 50 points. You know, to make it worthwhile as a day trader, you should be at least getting 100 points. This thing runs 50 points in turns, so it's out of play. Okay, that's really not that impressive. You want to see something like this. Okay, look, inside bar. This thing runs from, let's see, what's the high there? 390, and let's just say this high over here, 435. All right, this movement right here is 50 points. How much further does it go after that? 453. So 390. I mean, this thing sucks. Okay. Okay. Oh, so it's getting excited there. See that? Getting excited. Okay. Let's see where that goes. But based on these movements, this thing is not likely to go anywhere. What time is it? 10. It's just over about 10:15. So that's whatever it is. Don't react to it. Just watch it. Let it play out. Okay. These movements just previously, you know, these are not very impressive. So how far do you think that's going to go? Probably not very far. Let's measure this move right here. Inside bar, right? What is that? 396 is the high on this candle back here, right? 396. It eventually, if he held on through all of this noise, which requires a lot of patience, eventually it went to 539, okay? That's the kind of move you're looking for, right? That's the kind of move. But look at how much garbage you have to sit through. Each candle is 5 minutes, okay? So as soon as an adverse candle shows up, you're likely to react, especially if you see something like this. Okay, so this is not, you know, this is not very impressive. Since this nice movement back, you know, what was that, at 4 a.m. basically, between, that was, I guess that was the Euro Open, right? The European Open. Since then, this thing's been nothing but overlap. Nothing but overlapping each other. So you can't be taken in by a movement like that, all right? So look, interesting that it went straight to this resistance and it's backing off, right? I put those lines in advance. So again, you know, as a day trader, sometimes you have to just start out watching and waiting for something that shows up that basically allows you to isolate a high probability opportunity. Does that make sense? There may be days here where I look at this on this time frame and we don't get a trade signal in the period that I'm talking, right? That's very possible. So keep that in mind. You don't just jump into things. Okay. The first thing that I do usually before I even put on any trades, I watch for about 10 to 15 minutes and I'm looking at context. I'm gathering information, right? So then I can say, okay, here's a scenario that I'm looking for. I arrive at a scenario that I'm looking for. and then I wait for the market to show it to me. If the market doesn't show it to me and it wastes too much time, I turn off my platform. I don't waste time, okay? Because the market is notorious for consuming your time. And the worst thing is when you lose money, you spend 3 hours, right, waiting and waiting and waiting. Something sets up and then you lose money, okay? And that was a complete waste. So if the market doesn't show me something in a relatively short period of time, I'm done. I turn off the platform because I know that the risk, it's just not worth it, okay? It's not worth it. So let's see what some of the comments here are. Okay, can you share with us what stocks you're interested in to buy and hold when the Fed will flip? I don't have that. I haven't done the research yet, Alex. I need to research that. Okay. I mean, there's a couple of like some of the ones that are being talked about in the chat room, right? Like Butterfly and those are interesting stocks. But I want to have more than just a couple. Okay. So, and JP he's really good with that long-term stuff, and he's got a lot of great information. So, I have to work with him some more to put together. I want to put together like an official portfolio, okay, that I can share with members. That's what I want to do. And then I put it like, somewhere where members can see it, and then they can determine if they want to reflect that, those picks or not. But that's the plan. Okay. I want to have a group of altcoins. I want to have a group of high potential, low float stocks. There's going to be certain categories, and I'll have a certain amount of money allocated, like a base amount of money. Okay. So like, $10,000 or $20,000. And this $20,000 is going to be allocated this way. And, basically it's just a game plan. Look at this thing, give it back. Interesting, right? Look at this. All right, hold on. We have here, this thing has 2.5 minutes before it closes. Let's see if we get the bearish inside bar. Okay, again, keep in mind, people that are watching this from the day trade perspective, I'm doing like a play-by-play here. I'm not taking these trades. I don't have my platform open, so I'm not taking any real risks. I want you to understand that. If I see a trade idea, I'm going to mention it. I suggest you paper trade it, okay, just for educational purposes. Don't sit there and, I'm going to make money. These things can lose, all right? And especially going into a Fed meeting, this is not the best time to be taking trades, just so you know, right? So the risk is going to be elevated, but that may turn into a sell signal, and we'll see how it goes, okay? So let me see what I'm looking at here. Great idea. Okay, cool. I appreciate that, Travel. All right, and it's good. Thanks for joining us again. It's always good to see you. Yeah, again, I'm putting these out each day because, for one, it helps me get my message out, and of course, more content. In that case, more is better, right? In the eyes of YouTube, more content is better, and everyone that puts out more content, they receive rewards because they're engaging people more. Okay, that makes sense. So my less is more strategy doesn't work very well with the YouTube algorithm. Okay, let's see. Let me just go back to the comments. Okay, cool. All right, so I don't see any other things. So let me continue. Mark P Markets ETF. Yeah, right. But yeah, I think it'll be a great thing to have that. And even if you don't take all the picks, some of them are going to be more risky than others, of course, but I want to be able to notate that and be like, okay, look, these are the high risk group. Here's the moderate risk group. Here's the lower risk group, and have it really nice and organized. Okay. I think that would be a great like model portfolio type of thing. Again, it's going to take me some time to put that together. I mean, I don't even have time to put thumbnails together right now for these streams. Okay. I don't even have time to do that. And I barely have time to make calls because I'm trying to get the payment processing thing together. I'm trying to complete that so that I can put the paywall up, and this will be a little bit more worth my time. I don't trade at this time, but the time that I spend on what I spend it on, I could be in the markets at that time, and I know how to pull money out of the market. It's hard, okay, but it's a better use of my time than theoretically than this. Okay. Anyway, so let's take a look at this. So look, that sell signal, look at that. Again, why I don't react and I wait for the close. See that? Close strong. That's the random nature of the market. And if you react, like I tell people, you don't react in this game. You have to anticipate, or at least in this case, wait for confirmation. See, we can anticipate. We can say, oh, look, that's a resistance, right? And selling activity should appear there. We can anticipate that, yes. An oscillator is not going to help us do that. Nothing is going to help us do that, okay? We have to know that the level is there, and we have to recognize what can happen there. Now, whether the market confirms that is another story, okay? You may get like an initial sell-off, like initial where the candle is still open, and then next thing you know, it closes strong. That's why you can't step in front of these things, okay? Markets are random. You have to respect that, especially on a Fed day. I'm not expecting anything spectacular here, right? That's why I said, we're not going to be in a hurry to buy this thing, right? When it was spiking like that, how many people do you think got caught in that? And now they're like, oh, now they're hoping, oh, I hope it goes higher. You know, it was strong. Ooh, I don't know about this candle. I don't know what to do, right? So they just hope. And then the further it goes against them, the more they hope. They don't get out. So right now in this situation, the low is 23.95, okay? This low right here, that's the entry price. We know that in advance. We know that now, okay? Because that's an inside bar, and that would be the break of the low. Now, look, it's on its way there again now. What's the price? 406. So if this candle closes, how much time? We have 4 minutes. We have a lot of time before this candle closes. If it closes like this, that's just a compound signal. If it takes out the low at a better price, okay? But in advance, we know that that's a possible entry. The stop is probably going to have to go up here. It's a little risky, okay? Why not over here? Because this thing is all over the place, okay? And you really should go by the candle that is wide, that has the wider range, right? And especially in a market like this. So it's riskier, which means you have to justify that kind of movement. If you're getting short at 23.95, all right, and you're risking, what's the high there? All right, so about 60 points, you need to make at least 60 points. So you're targeting 60 points lower at minimum, okay? And if you get a conflicting signal somewhere along the way, you're probably going to have to get out sooner for a lesser profit, right? And you're like, I risked 60 points, but I only made 25 points. Not really worth it. So you don't continue. If that's the way the market is, you don't continue. All right. Again, like this, just looking at this alone, I probably would look at this for about 5 or 10 minutes and say, it's not worth it. And I'd turn the platform off. That's what I would do, especially since I know today's a Fed meeting. This is typical price action going into the Fed. All right. Typical. Okay. You never thought on using the short or long position drawing tool. Stian, I don't like that tool. I see other people use it, but it's just, I don't know. I just never really, I don't know. I just thought it's kind of a pain. This way is visual for the viewers levels. Right. So I understand. I know the tool. I see a lot of fakeroos use it, but yeah, I'll keep that in mind. I mean, it's not I guess it is a useful tool. I guess for viewers, I just draw these lines. I mean, I just do what I normally do. Okay, but anyway, thank you for the suggestion. I'll certainly keep that in mind. All right, so no trades. We have no trades here yet, but we have some potential levels to consider. But, let's just zoom out a bit, right? Just zoom out. Look at this. Does this thing look spectacular to you? It's a range, okay? It's consolidating, and that's typical going into the FOMC. So I'm going to leave you with that. Now, here's the thing. All right, so again, key lesson with something like this is know what kind of day you're facing. Know what kind of news. If there's a heavy piece of news coming out like that, then don't expect much from the markets earlier, okay? This is typical. I see this kind of behavior all the time, right, going to the Fed. That's why when I used to trade the open, and if it was like a Fed day, either I would try to trade the open and I'd get hammered, okay, because I get caught in this noise. And then I'm like, I'm just not going to trade on the Fed day anymore, right? So now when the Fed comes out at 2 o'clock and then 2:30, between 2:30 and 4 o'clock, there's probably going to be some decent action at that time for day traders because all the volume is going to come back and there's going to be some sort of sense of certainty in the market because the Fed will have told them, the Fed would have shared their message, right? And now the market is going to adjust. So, that's where signals can become more meaningful. But keep in mind, there are going to be a lot of fake outs too. So there's a lot that has to go on in the thought process. I'm trying to describe the thought process here. Okay, look, that candle closed. So look, and it closed inside that previous candle. The low is now 406. 406 would be the entry. Okay, so it gives you a tighter stop. And look, it took it right out. So if you want to take that on paper, short 406 or 405, stop goes up here at 44. So you're basically looking at like 40 or 50 points risk, and this thing is going to be tricky. Like I said, it's really not worth taking, okay, because the movement's going to be lousy. And, you're only looking for something like this over here. So you're hoping to make 50 pips or 50 points if this thing can get there. And it's probably going to be very annoying and require a lot of patience to sit through. I personally would not take it. Like I said, I would watch this thing for a few minutes and say, this market sucks, and I would turn this thing off. Okay. Better thing to do, wait for the Fed to come out. But, you want an educational experience, there you go. All right. So that's that. Do I have any other questions about anything? Do you guys find this useful? I see some people watching. That's cool. And that's why I brought these things to YouTube, because, I do want people to see, what's going on, and that there is a learning opportunity here. Okay. I'm not just one of these guys that's going to sell you some fake software and some other fake nonsense and hope you click on my links. Anyway. All right. So speaking of that, hey, Joel, a respected macro analyst, not a fake guru, said TLT bottomed. Not sure if the chart agrees with that. Well, TLT, so again, you're talking about the tips. Is that the tips? Or is that TLT? Is that, oh, that's just the bond ETF? Well, so look, I don't, TLT, okay, bottomed. All right, so this is the bond ETF. Oh, that's the 5-minute chart. Okay, let me just run through that real quick. Let's take a look. I don't agree. I mean, I don't care about respected analysts. I don't care what their title is. I don't care who they work for. Okay, if they come out publicly and say something, I don't trust them, number one. All right, because a lot of times they have an agenda. So, like I said before, we're looking at the 10-year note. It's too early to say that this is bottomed. It could be right, but I don't see any real evidence. What, we have a higher low over here? If he's just looking at this chart, then, I mean, he's making a mistake. I'm sure he's looking at a number of things and other fundamentals, but I look at this chart, okay? And it's possible higher low, but it's way too early to call a bottom, way too early, okay? So, a lot of these guys, they come out, oh, respected, blah, blah, blah. I don't buy it, okay? No one knows anything. So I don't let those opinions phase me. I spotted the market top, okay, back in November, December. I spotted the market top with the bond market, and no one was talking about a market top. No, all these respected, oh, yeah, I'm a respected, blah, blah, blah. They were too busy being distracted or being obsessed with S&Ps making higher highs. Who cares about the bond market? I saw the risk. I'm not a respected analyst. I don't work for Goldman Sachs and all these other, it's all nonsense. It's just a veil of fraud, okay? They're just so, and I'm going to get on a rant here, but I'm just saying it's too early to call a bottom. Technically, it's too early. So it could be, but it could not be. We'll see. And the Fed today may give us some further insight on that. And NFP on Friday may give us even some more insight on that. If these bonds make a new low, he's wrong. Okay, if the bonds fake out and produce a double bottom, over the next few days or whatever, well, then maybe there's some merit in that. But I need way more proof than some guy coming out telling, oh, the bottom of the bonds is in. I need more proof. Okay, I'm not going to listen to some guy. I hear expert after expert after. Experts can be wrong too. Okay, I remember you being bearish at the top, and everyone, yeah, right. Remember that, Sean? You remember that? In fact, you can go back to my videos at that time on YouTube, and you can see what I was saying. Okay, the videos are there. I don't erase them, like some people, and they're there. So that, the bond market and the Pring-Turner business cycle is really what helped me spot that. All right, and I respect the price, and since I know what I know about price and I trust the price, I saw that, and all I knew was the risk was high. That's what I knew for stocks. Stocks were making new high after new high after new high. People were investing. Oh, I'm going to put all my money in Apple. Yeah, at the high, while risk was increasing. I saw it. Okay, so if I saw risk increasing, that means I'm getting off this. I'm laying off. I'm not touching stocks. And eventually, it took a couple of months, but the top, the stock market peaked, and now blah blah blah. Now we know. Okay, and no one foresaw the geopolitical tensions and all that other stuff. No one foresaw any of that stuff, and it all just laid on the market. Okay, and the market was in a vulnerable position because now rates were rising, and then suddenly, oh, raising rates are bad, right? And then they realize. So don't pay attention to people, please. Let the charts tell the story, not people. I don't care how much of an expert they are. No one knows anything. Okay, they're in the same boat as you. Maybe they know some insiders, okay, and know that kind of stuff, but they're not going to share that information publicly. If they do have inside information, maybe they can give some hints here and there, but I trust the price. I trust the charts before I trust people. All right. Even with the signs clear, people want to ignore it. Right. Well, that's irrational, Sean, with the signs clear. I remember back in 2007, 2006, I remember a very similar situation, okay, with the housing market. I remember the signs were crystal clear, but no one wanted to hear it, okay? People like to be lied to. People like to be lied. I see it with the fake guru situation right now, all right? People would rather spend $1,000 on a dream than on $300 on something that's actually going to help them save money or protect themselves. They would rather buy a dream. It's human behavior. And I can't save you, not you, Sean, but I can't save people from themselves. I can't save you from human behavior. You have to recognize the liabilities, okay? And then you have to separate yourself. It's a very tough process, especially when everyone around you is mindless and doing the same thing. It's the herd mentality. We can't even see it, okay? Especially when you're in it. So people are obsessed with certain things. They see their friends making money. Oh, the S&P, yeah, right, invest in stocks. It's a safe time to invest. Strength in numbers. You have to think the opposite. It's very hard to do because it's not comfortable, okay? But it's objective. You have to be objective. And if certain signs are pointing to problems or trouble, just like, when it's going to rain and you look in the sky and it looks like it's going to rain, so you get an umbrella, okay? You have to recognize the same things in the market. And there are signs, but your emotional layer does not want to see these things, especially if you're long a lot of stocks and you're like, oh, I'm making money. I want to keep making money. You have to recognize that. I can tell you where the problems are, but if you can't recognize them for yourself, or you cannot get over your own greed or your own other human nature motivations, I can't help you with that. Okay. Anyway, it's not only retail that can be that's correct, Kai. That's correct. Fund managers have the same look. Just because I just keep talking. You guys just keep me talking. A fund manager, people think, oh, he's a fund manager. He must be smart. Yeah, maybe they go to a good school, but these guys they're connected. They have some kind of connection. They get to manage a lot of money. They're just as mindless and as dumb as most retail traders. They just have a lot more money and they have better resources. Okay. So they're not, they also, many of them, they're not skilled traders. Okay. A lot of them are not aware. I remember years ago going to like these meetings at the CMT organization, and, fund managers would come to those things. And I remember talking to a few of them, and man, I'd be like, these guys don't know anything, but they don't look at technicals. They're focused more on, whoa, fundamental this and good story that. And I talked to the CEO of this, and they're just in another world. Okay. And they look at charts as, oh, that's just baby stuff. But there's a lot of valuable information in a chart. Anyway, they're not in tune with that. They're only interested in making fees, by the way. They don't care about the trade outcome. They only make money on fees. So if the whole portfolio does well, oh, I got my 20% bonus this month. I'm an expert, right? That's how they make money, right? Fund managers, hedge fund managers, all these, they make money on fees. Bankers make money on fees. Hedge funds, other institutions, investment bankers, fees. It's all fees. They don't care about the outcome, okay? That the whole wealth management business, fees. Oh, well, I'm going to put you on a portfolio, and what's this? Someone spamming me? New AI? Oh, come on. At least it's not porn. Wait, dating. Oh, it is porn. Is it porn? What is that? I got to get rid of this guy. Hold on. Why do you come in here and spam me? Seriously, man. Come on. This must be another, what do you call it? A novice spammer. Okay, you get these novices who come to my stream. I have less than 20 people, you fool. Why would you spam my stream? Okay, fine. There are numerous fake gurus that have hundreds of people watching or thousands of people. There's a better chance that someone will click on your link. Maybe they're thinking, well, there's only a few people in here. Maybe one or two people will click on the link because there's no other streamers to compete with. I don't know. But dude, you're a novice. Stop spamming my stream. All right. It's not only retail, especially after 13 years of favorable Fed. A whole generation. Right, right, Kai. I mean, again, a lot of these fund managers, they just go with the flow. They're just mindless like everyone else. And they make irrational choices as well. And they have other pressures on them as well. So, it's not the same game. One advantage that the retail trader has is they can be quick, right? They don't have like 10 million shares of this giant portfolio that they have to manage. They can be very nimble, but they just don't have the experience or the know-how to do that. Anyway, these spammers are after quality. Is that what it is? Well, they're gonna have a tough time in my chat, unless Bill clicks on it. I'm joking. I always pick on Bill. Bill's not going to click on the porn links. He's not going to click on them. Okay. I guess that, there must be a reason why they keep coming to my stream. I don't know. Anyway, all right, you guys, I got to stop talking. It's enough. So enjoy the rest of your day, the rest of your evening, wherever you are in the world. Thank you for watching. And again, we'll see how that Fed outcome comes, and we'll talk about it tomorrow. All right.